Crypto is a very cyclical industry. Narratives gain traction, then subsequently lose it again. Currently, the privacy narrative and ZCash in the middle of it is gaining a lot of traction. Now, there's been several videos on ZEC on this channel. And we can also see in the viewership of those videos that there's more and more interest. We still see many people searching for ZCash on YouTube. Now, here's a mistake many people do. Most people just look at US dollar prices. The problem is that US dollar prices are influenced by the general market. When Bitcoin and Ethereum is going up, then most altcoins go up as well, and vice versa. What's really interesting is how is one altcoin doing relative to the rest of the altcoin market or relative to Bitcoin and ETH. And that's what we're seeing over here. Does the additional risk that we take on by buying a small altcoin get compensated? This is ZCash relative to the others market cap. Now, the others market cap is the market cap of the altcoins that are not in the top 10. There was a lot of token inflation of ZCash at the beginning, but every 4 years we get our halving. The price was able to stabilize, and this is our recent privacy narrative pickup. The rally of ZCash relative to the rest of the altcoin market is more than 800%. Here's a slightly modified version of the chart. So instead of looking at the ratio to the others market cap, we look at the ratio versus total 3ES. Total 3ES is the entire cryptocurrency market cap minus Bitcoin, minus Ethereum, and also minus stablecoins. The rally here is slightly lower in magnitude. It's 720%. Still, we've clearly broken out of the long-term underperformance trend. The question is always, what's driving such a rally? Are there currently a lot of retail investors jumping in? Is this the whales manipulating the price? What's actually going on? Now, in this chart, we see the underperformance of ZCash due to the token inflation. What we see over here, that's the US dollar price over time. But compare this with the market cap over time. Isn't that fascinating? As in, the US dollar price is, of course, very far away from the all-time high. ZCash once almost reached $1,000 per token, but at the time the market cap was only at 2 billion, and this time it's closer to 4 billion. So you can clearly see the cyclical nature of crypto. People get excited, and then if you catch the wave at the wrong time, you might also get wrecked. The tough spot is, of course, to always determine where is the top of a rally. But it doesn't seem like, just based on that chart here, that we're going to go to 10 billion or to 15 billion. There is the chance that we are going to deflate one more time. And this can be painful. Those are reductions in the market cap of more than 90%. The main driver of price discovery right now seems not to be the spot market. We've got 137 million worth of trading volume on the spot market, but compare this with the perpetual futures market. Here we had much more trading volume. Now, why does this matter? What's the difference anyways? It matters because the kind of investor that uses the spot market is very different to the kind of investor that uses the perpetual futures. People use perpetual futures because we can bet with leverage on prices and because we've got very small transaction fees. So you can get in and out very quickly. Trading on the spot market is not that efficient if you want to buy and sell frequently. The advantage of the spot market is that we can hold long term. There are no financing costs embedded in the spot market, but there are financing costs embedded in the perpetual futures market, usually around 11% per annum. So really, it's not necessarily the cheapest to get exposure via the perps. But if we get in and out of the asset regularly, we should use the perps. So when there's that much more activity on the perps relative to the spot market, that means there's a lot of short-term capital that's currently in the asset. Have a look at the open interest over time. So that's now the amount of bets that are made through the perpetual futures. Have a look at how the amount of bets correlates with the spot price. The spot price is in yellow, the open interest is in green, and whenever there's less bets on the price, spot tends to also fall because there are arbitrage bots that balance out the open interest price with the spot price. Once open interest falls, the spot price tends to follow. And again, the problem now is that open interest is at an all-time high. If open interest was to come down, then the ZEC price will follow. There's also some correlation between attention on an asset and its price, as in how much does an asset currently get traded? What's the trading volume historically? So we're seeing the trading volume here in green, and the ZEC price is over here. Again, when there's more trading volume, the price tends to be high. When there's less trading volume, it's actually a better time to buy. And so just given the high open interest and just given the high market cap as well, it's probably not the best idea to get into ZCash now. Is it a good idea to bet on falling prices? It probably depends, because if we're now shorting and suddenly we move up to 6 billion, which is definitely possible, then you're getting wrecked, then you're losing funds. The problem really is that currently the financing costs are still negative. So there are more perpetual futures traders that are currently betting on falling prices than on rising prices. So the market makers have an incentive to buy up the token on the spot market and push up the price, because then they get the funding rates, but then they also get the liquidation fees from all of those shorts. So there can be future short squeezes. So you might remember the story of GameStop, right? Where the hedge funds bet on falling prices of GME, and then the retail investor via Reddit posts bought up the supply and pushed out the hedge funds. So the hedge funds lost and the retail investor gained. Here in crypto it's the other way around. So there are many retail investors that bet on falling prices, and then the market makers that have all the funds, they can buy up the token, push it higher and squeeze out the retail investor. And I think there's a good chance that this could still happen short term for ZCash. Long term, I'm not optimistic for ZCash. I think there's a very good likelihood that 1 year from now the price will be lower. But short term, we could see another short squeeze. We could see more manipulation, and the market cap could go up to maybe 5, maybe 6, maybe 7 billion, but it's probably not going to reach 15 or 20 or 25 billion. There is a ceiling to how much manipulation makes sense given a market cap. The best call to action is probably just to wait until things have slowed down and until we see a clear turnaround in the trend. Once attention is going down and once some shorts have closed their positions, we are likely going to see a continued fall, very similarly to what we have seen in prior cycles. And that's probably the best risk to reward. We just wait until the party is over, and once nobody talks about ZCash anymore, that's a time to then bet on further underperformance of the asset. Now, there are different ways to interpret the current market situation. What we see over here is a long-term chart of the stablecoin market cap. This starts in 2022. We had the Terra Luna collapse over here, where then the market tended to shrink until October of 2023. So the stablecoin market cap went down by 27%. But since then, this chart is going up. Now, when the stablecoin market cap is going up, that means people are moving their funds from the fiat ecosystem, from traditional finance, into crypto. People are sending their hard-earned cash, say, to Binance. Binance sends it over to a stablecoin custodian. The stablecoin custodian is buying bonds. The stablecoin custodian is making money via interest, issues the stablecoins, and the stablecoin issuance can be seen in this chart. So whenever this is going up, money is getting into the space. And that means crypto prices should, as per tendency, rather go up. How much should they go up? Have a look at this here. In red, we see the crypto market cap except the stablecoins. So all the cryptos, Bitcoin, Ethereum, and all these smaller cryptocurrencies. And of course, they tended to go up since the stablecoin market cap increased, but they went up more, right? 270%, while the stablecoin market cap went up only by 130%. But there is a catch here. I don't necessarily think that most cryptocurrencies will grow faster than the stablecoin market cap. Because here's the thing, there's not just the stablecoin market cap, there's also the degree to how much those stablecoins are getting deployed. Some people might just transfer their stablecoins to Binance, hold that in their wallet, and then wait for a while until they actually buy altcoins with it. The trading from stablecoins into risk on volatile cryptos, and from volatile cryptos back into risk of stablecoins, that's actually what causes the short-term fluctuations in the market. Because obviously the stablecoin market cap is going up much more smoothly than the prices, and that is because of stablecoin deployment. Now this here is the stablecoin dominance, and it trades between 5% and 9% of all of crypto. Have a look at this yellow circle here. This is when the stablecoin market cap tended to turn around, when there's more money flowing into the system. So from that point to today, we have seen the stablecoin dominance go down. So the market as a whole got more risk on. There's less dry powder on the side now than there used to be in October of 2023. When we actually compare 2 points where the stablecoin dominance was very equal, then we are getting a different picture. So this red circle over here is the same time with that red circle over here. And so the stablecoin market cap went up by 128% since the beginning of 2024, while the stablecoin market cap went up by 115%. So the growth rates are extremely similar. When the stablecoin market cap goes up by 10%, then crypto prices on average should also go up by 10%, maybe slightly more. But there might as well be zero difference if we just come a little bit more down in the crypto market cap. So really, the two growth rates are very similar. We have to work with how quickly the stablecoin market cap is expanding. And so how quickly is it expanding? In the last 12 months, it went up by 65%. In other words, if we don't see any systemic implosion, if we don't see something like the FTX collapse or the Terra Luna implosion, if the market continues to expand, then we should work with a growth rate of 64-65% per annum from here across all of crypto. That's how fast the stablecoin market cap is going up, and it's doing that expansion at a quiet, consistent rate. Now then we have to wonder, if we are in a bull market since October of 2023 and we are expanding at roughly 65% per annum, does this also mean that it warrants to get more risk on, to potentially buy more altcoins and potentially sell Bitcoin? Let's have a look at the altcoin performance since October of 2023 relative to Bitcoin. This point in time over here, this circle equates to this point in time over here. This is now total 3 ES, so the altcoin market cap minus the stablecoins relative to Bitcoin. So how did the altcoin market cap do relative to Bitcoin? And it actually went down. Bitcoin outperformed during this expansionary period. The altcoin market cap went down by 17%. The problem is that this chart is even underrepresenting of how bad the altcoins did. This here is much more representative. Remember, the stablecoin market cap went up by 65% in the last year. This is the performance of the smaller altcoins in the last year. Most of them went down. They did not on average appreciate by 65% or maybe a bit less than that, let's say 50%, because of this underperformance. The price performance seems to be much, much worse. And the reason for that underperformance is token unlocks. So early investors and the team and insiders, consultants, etc., they get token allocations over time. They get vesting periods and they can then sell those tokens. There are various pages describing the situation. This is coinmarketcap.com/token unlocks. We can see how there are several unlocks across many different cryptocurrencies. So let's say a cryptocurrency is at 1 million tokens, and then come all of those vesting unlocks. All the insiders get access to newly minted tokens. The supply goes from 1 million to 2 million. Then maybe the price gets cut in half, but the supply has doubled. The market cap of that altcoin is unchanged. But everybody that bought the altcoin, they lost 50%. So the insiders dump on the retail investors. And that effect is not seen in market cap comparisons. That's why we cannot use the others dominance or the total 3 dominance or even the Bitcoin dominance. The Bitcoin dominance should be much higher, as in if we just compare prices, not necessarily market caps. Let's have a look at a few of those altcoins here. Minus 99.5% over here, minus 99.9% over here. This went up initially, but from the top of 30 cents, this also crashed massively to 2 cents, because probably that's when the people started to sell. Then we've got here minus 56%, or over here minus 61%, ApeCoin. And this is much more in line with this picture over here, right? Charts like this. Let's actually have a look at ApeCoin in a bit more detail. This is the number of circulating ApeCoin over time. We started at 284 million and now went up all the way to 940 million. So the supply more than 3x'd. And who got those tokens? Again, it's the insiders that dump on the project. They take the money. And so the straightforward approach would just be to bet on falling prices of most altcoins, especially on the altcoins that tend to have a rising supply. So when ApeCoin goes down, let's just bet on falling prices and get this return instead. The problem is that we do have a lot of volatility here. This is a crash of 74%. So betting on falling prices can also be a problem if there is positive news and we see a temporary rally in the price. But we can mute this risk somewhat. Because one of the reasons why sometimes those short positions can also be dangerous is because the market as a whole might go up. When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well. So really what we are interested in is the ApeCoin performance relative to Bitcoin. This is now Bitcoin divided by ApeCoin. And this is much less volatile. This only dropped by a bit over 50%. Have a look at the volatility of this chart versus this chart. Isn't it much better to invest in this instead of into this? All of those drops here were just the market itself going up. It was not ApeCoin doing particularly well. This, by the way, is a logarithmic scale. On a linear scale, this looks much more juicy. This is how we make money in crypto. And this is a very uncommon approach, right? Most people, they try to find the next hidden gem. They buy an altcoin portfolio. They have maybe 10, 20 altcoins. Try to find the next thing that does another 10 or 100x. But I don't think that's the best way to go about this. Do you really want to find a winner in a market that looks like this? Do you really want to scan the market and find the next wallet token that makes 53%, where at the same time Bitcoin doubled? I don't think so. I think it's much better to turn everything that's red on this chart to green and everything that's green on this chart, which isn't much, into red. I'm following this approach already for the last 4 years, and had I just dollar cost average into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices, I got the performance here in black. It's a constant outperformance. It's not about finding the next 100x luck shot. And so I'm talking about the strategy in more detail in the premium membership of this channel. Here are a few trades that our members have shared that shorted various altcoins with high token inflation. And I made several videos on the topic as well. Now you don't have to watch everything over here. There's only 2 very important videos using perpetual futures to bet on relative valuations and risk management with relative valuation bets. Risk management is extremely important. Here's the first video, it's 34 minutes. Here's the second video, it's 28 minutes. And the reason why I say risk management is so important is because there is a lot of volatility within the perpetual futures market as well. And if you don't know how to handle leverage properly, if you don't know how to do proper position sizing, then you will lose your funds. You will not make this kind of returns. The recent shakeout in the market actually helped us. It was one of the best weeks we've ever had. We made 10% on our copy trading capital pool. Now, once you've joined Premium and you've watched the 2 videos, I will share my favorite trade with you. It's something like ApeCoin, but better. If you don't make money with that trade when holding it for 1 month, then I will refund the membership fee for you. So really, you're not risking that money. You're not risking the 125 US dollars. If you're not making money with the trade that I'm sharing, I'll just send that money back. No questions asked. Now I've talked about this trading pool over here. This was a project launched in July of this year. Again, where we were following relative valuation trades. Everybody that got in this is already up 19%, where at the same time Bitcoin lost 9%. Now unfortunately this capital pool is already closed, but if you're part of the annual members, you will get access to the next pool in January of next year. Feel free to check out the tutorial video of the last trading pool. Again, it's an approach to bet on charts like this without having to execute the trades yourself. I simply just trade for you. I'm of course sharing all my trades to every member, but if you want to become part of this project, then you can also consider joining up for the annual membership. So that's over here. You're also saving $250 per year doing so. But you can simply start off with the monthly membership and then switch over to yearly afterwards. A link to Premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!